Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be going through many indicators which suggest that we are either at or very, very close to the end of this bear market. So I'll be looking at things like the hash ribbons, the RSI, the MACD, the long-term holders chart, etc., etc., including the bars pattern, which I've been showing in terms of the comparison with the 2018 market and the current bear market. Please stick around to the end, where I'll be sharing with you a little bit of the strategy of this balancing act that we've got to go through in terms of not missing out on the next big move. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before we do that, let's get in the mood for Bitcoin by opening up the Bitcoin vault and having a look inside. Oh, I love the smell of Bitcoin. Okay, so we're going to start off on the daily chart and we're going to look at the hash ribbons here. And we're on the BLX chart, which is the overall total market for Bitcoin. And as you can see, we've got the blue dot here, which is the buy signal. And that is exactly at around about where we are there now in this region. And whenever we get these blue dots, that seems to be historically one of the best times to get the Bitcoin just before the market starts to move in the upward direction. As you can see from here, if you'd have bought here exactly at this buy point, you'd have got in about there, and then you had this big move here to 69,000. Same with this one here. If you go right to the top there, that was exactly the point where we hit the 20,000 from the previous high, and that was the beginning of a big part of the bull market there. And similarly, we got them here. So if you look at those points there, they're around about here. Yes, we had this fall here. That was a one-off black swan event. But when it came back up, we got another blue buy signal here and another one over here just before the market took off in October 2020. This blue dot here, exactly the same. We're at the bottom of this bear market in 2018, and that was the start of the bull market there up to the 14,000. If you look back in history here, very, very similar. You got these three blue buy signals here, which corresponded with this low period here. Yes, in between that, the market moved up and down, but because no one knows the top and no one knows the bottom, these are the best signals we've got, knowing that as long as we've got a 12-month view or more, these signals are going to actually make you a lot of money. So with this signal here, you can see quite clearly it was at this point. With this signal here, it was at this point, and this one here. So you can see that virtually every single blue buy signal here, these are the first ones that we got back here. And if we move to the weekly chart here, we can see quite clearly, currently, we've got this capitulation signal here at this bottom part that we're going through currently. Now, if you look in history, whenever we've got the capitulation, which was over here back in May 2021, that was followed by a buy signal here. And that was right at the point of the next run up to the 69,000 over here. If you go back to 2020 here, the blue buy signal was right at the point when we broke out here at 20,000, and that was followed by a big move to the upside. Similarly here, around the COVID situation, we got three buy signals here. And wouldn't that be a fantastic time to have bought at that time, not knowing that this was going to go up, but these signals were saying that we are going to be going to the upside. Similarly, if we go back in history here, this was the buy signal we got right at the bottom of the 2018 bear market. These three signals we got here were right at the bottom of this bear market in 2015. And if we move further to the left, once again, the first buy signal we got was here at the top of this rally that we got. But what was to come afterwards was this market here. So yes, these are not exact signals. It's a ballpark signal to tell us that we are very close, and as long as you've got a 12-month view, we're very close to a big massive move to the upside, and every one of them has been followed by that trigger. Even this one here was at the top after this big rise here, but this was to trigger off this big run over here. And if you take the measurement from this signal, which was around about here, to this point at the top of the market, that was 53x. So $1,000 invested here would have given you 53,000x over here. Obviously, we wouldn't have been able to sell at the top here simply because no one knows when we get to the top. However, as long as you catch 50, 60, 70% of this move, you'll have done really well. And really, that's where the strategy comes in with these types of signals, that each one of these blue dots has proved, as long as you've got a 12-month view, to be extremely profitable. So on the weekly chart here, so as you can see, as soon as we get a green dot, which is a capitulation signal, that's usually followed by the blue dot, which is the buy signal. And hence over here, over here, over here, and over here. And now currently, we've got this capitulation. And so we're about to have, very shortly, another blue signal anywhere in the next few weeks. So this is really giving us a sign that we're at the end of this bear market. Okay, moving on to the monthly chart, we'll have a look at the RSI. As you can see with the RSI here, this was the end of the first cycle at the end of 2013. When we came down to the bottom of that bear market, the RSI touched the 40, and that was the signal for the market to start going up over here. At the end of the second cycle, at the end of 2018 here, we came down to the 40 level on the RSI once again here, just like the first cycle. And that was the start of the next run that we've just had. And currently, we're exactly at that point here now, even though we've breached it to the lower side. But certainly if this chart is to go by, then the RSI is giving us a clue that we are at or very close to the end of this bear market here. Okay, moving on to the weekly chart and having a look at the MACD, which is the moving average convergence divergence. We made a bullish cross right over here, where the blue line went above the orange line here. And that was just about this point here, when the market was around about 24,000. And as you can see, we're making a slow but steady rise. And once we get above here, that's when all the action will take place. And at the end of the first cycle here, in 2015, at the end of this bear market, we got the exact cross on the MACD here before we move to the upside. So this current cross that we've now got here since August this year is telling us that we're now winding down to an end of a bear market phase here. So there's a consolidation going on. And this is the chart I showed you in the last video. And what this shows is that we are following this current trend line here at the top, from here, back at the end of 2013, the top of the cycle then, to the top of the cycle here at the end of 2017. And we're hoping that that would be the top of the cycle over here in 2025. And at the support level, this goes back to 2011 here, all the way through the bear market here, and we're currently holding support on this trend line. So this trend line stretches back 11 years, and that would suggest that we're right at the bottom of this bear market over here. And if we go on to the weekly chart, I've been showing you this bars pattern, i.e. the pattern from the end of the 2017 bull market is very similar to the current market here. So what we've got is a top over here, just like the top we got at the end of November 2021. The 2018 market was followed by 3 lower highs before we got the capitulation to the bottom. And similarly here, we've had 1, 2, 3 lower highs followed by a capitulation to the bottom here. And then once we got to the bottom here, we're creating this double bottom pattern, which we did in 2018, and that's very similar to what we're doing exactly now here. And at this point where we are is currently where this was in 2018, where it slowly made its way up to the white line, which is a 50 simple moving average over here. And that confirmed the end of the bear market phase here. And this is where we're at now. Currently the white line here, the white average, 50 simple moving average, is at 32,000. But as we move slowly but surely up here, then this white line will be coming down to meet it somewhere down here. So once again, this same pattern of the 2018, if this is to be followed, and if we carry on doing what that pattern did over here, would suggest that we are at or very, very close to the end of the bear market over here. Okay, so this is where we're at currently. We'll look at the weekly chart, and I said at the beginning of the video that we'll have a look at a few strategies of where we're at and what we could do possibly here. So for me, this point here resembles very similar to what happened at the end of 2018 over here. If you've been here long enough, you'll know that when we got to this point here, we're faced with the same dilemmas, the same potential strategies as we are faced currently with this chart pattern over here. So back in 2018, when this pattern was playing out, the majority of people thought that we were going to go down to 1,000 here. And people got very greedy, thinking that, well, why buy here when we can go and wait and get a lot more units and get more Bitcoin down here at 1,000. And similarly, here, people are expecting the market to go down to these levels here, around about 12,000, 10,000 mark here. And just like in 2018, the risk you have is of what it actually did here. And that is, it left you behind. And this is what I'm looking at, that if I'm not invested at these levels, the risk to me of waiting to get down to these levels is this happening here, just like in 2018. And before you know it, the market has got away from you, and then you're chasing this part here. And the problem with chasing this is that before you're totally convinced that it has actually now gone past this end of the bear market, and we're not going to go any lower, the market has reached these levels. So by the time we get to these levels here, and you then jump on board, then not only were you punished here in the bear market, you're going to get a second punishment over here when we have a pullback after this rise here, when this happens in the current market. So what I can see happening is while people are waiting for these levels here, the market going up to about 32,000 over here. And I can expect a pullback at these levels. So when the price gets to 32,000, when people are convinced that, oh, this is now bottomed out, they're going to be clobbered the second time when we have a pullback at either 32,000 or here at 48,000. So you get a double punishment by the market. And that's what it's designed to do. Always remember, the market is designed to take the most amount of money from most of the people all of the time. And when this happened over here, this COVID situation, people got punished during the bear market. Then they got punished after it topped out at 14,000. And then when the market came down to this COVID situation, people thought, oh, we're going to get lower than this. And again, they sold here. So people were in cash over here and missed this ride. They bought over here, got clobbered at this point, and then they sold again here, thinking that this market is going to go much lower. And then they missed this ride here. And this is what and this is the risk that people have of currently hanging around in 100% position of cash. So the question is really that of balance. The market is a genius of doing exactly that. It's trying to punish all the investors trying to make money. And money will always move from impatient hands to patient hands. And the strategy always in every market has to be to take a balanced view. And as I've said many times before, my view is that I'm 75% convinced that the market has bottomed here. But I will always leave that 25% of wriggle room that maybe it will come down here. And for some people, that percentage might be 50% or 40%. Whatever that percentage is in your mind, it would make sense to be invested a little bit, at least have some interest in the market, that in case the market goes up from here, have maybe 20, 30, 40 or 50% invested here. Yes, the downside risk is there, but then you have the potential of an upside rally on your side. So for me, it's always taking a balanced view of the market. We must always look out for the downside risk while trying to gain from the upside potential. But I do know for one thing that in every market that I've been involved in, people will take the risk of holding cash if they think that the market is going to go lower. And then they miss this move to the upside, unless you take that balanced view. Okay, so we'll leave it there. I hope you found value in the video, and if you did, then please do remember to like and to subscribe and to hit the notification bell. If you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.